Welcome to my channel. Time for Bitcoin. Let's take a closer look at what Michael Saylor thinks about the whole case with the collapse of the FTX exchange. I think his opinion on this topic is very interesting. In this interview, he also explains what mistakes have been made in the crypto world.
Bitcoin, not crypto. That's the lesson. I think this week highlights the contrast between the virtues of Bitcoin and the vices of crypto. And it illustrates the wisdom of Satoshi. So if we go back to first principles, the entire Bitcoin movement got started because of a loss of faith in the currency and a loss of faith in banks. And so this has gone on since time immemorial. Banking crisis that froze customers' funds and currency crisis that collapsed their purchasing power. And Bitcoin was created as a currency that couldn't be debased, running on an open network so you could be your own bank. And the principle is, if you're your own bank and no one has discretion to debase the currency, then you're not going to wake up one morning and find out that your funds have been seized and they've been devalued to zero. Crypto and the entire movement is almost like the reinvention of fiat currency and fractional reserve banking, but instead of it being in a regulated environment, it's just in an unregulated environment. So ironically, we saw the same human behaviors here. A human being creates a wildcat bank, unregulated, then a human being creates their own currency, like the FTT token. Then they issue a bunch of it, then they start to leverage it and borrow against it, and then at some point they start to misuse the funds of their customers in their bank, and they use it to prop up their currency. Eventually the currency collapses, the bank freezes its assets. People who had trusted the bank lose their assets. People who had trusted the currency lose their purchasing power. And so this is a teachable moment, because the solution is don't put your value in currencies that are controlled by human beings. You can't trust the CEO, you can't trust a company, and you can't trust a custodian. And if there's a counterparty, it's credit, it's not money. And Bitcoin is nobody's liability. There is no counterparty. Anyone that joins the network is their own banker. The reason it's money is because no human being or no organization has discretion over it. So, and if anything, all of the Bitcoin memes have come back to life. Not your keys, not your coins. It's constant. And don't trust, verify. And it's sad to say that this is an incredibly expensive lesson in basic fundamentals of monetary theory and banking, and a principled way forward with your investments. I think what surprised me the most is fairly intelligent people and entities not realizing everything I just said to you fast enough. Right? For example, it seems quite evident, right? If you were doing, I didn't have a penny on FTX. I wouldn't invest a penny in FTT, right? I mean, from the very beginning, if people that have any business acumen or background, any legal sense, any ethical training, or any technical training in a university, if they would look at this, they would say, yeah, it doesn't make sense to invest in 20,000 random tokens that get spun out of nowhere that trade on an opaque offshore exchange with nearly infinite leverage. Right? Doesn't make sense, but it surprised me that so many otherwise intelligent people put so much money into these things. Why would a pension fund? Why would a VC, investor? Why would they put hundreds of millions or billions of dollars into crypto tokens and crypto exchanges, and why would they pursue these ideas in such an irresponsible fashion? And sometimes you almost want to tweet like people literally lose $1 billion chasing after these crypto casinos before they'll put $1 million in Bitcoin. They're, it's just fast money, borderline greed, I guess, thinking that somehow Bitcoin is too straightforward an idea. It's like Bitcoin is too honest, too ethical, too rational, and so the conclusion is I have to skip over that and I have to go for the next thing, the next Bitcoin or the next good idea.
I think Bitcoin's boring.
And so that's what surprises me, that people with billions of dollars in education that should know better, when they're granted something which is ethically sound, technically sound, economically sound, and the first perfected money and the first truly open, fair, decentralized monetary network in the history of the world, when they're staring at it, their reaction is, it's too boring, how do I take another crypto risk? And so I guess it just takes these billion-dollar blow-ups of Celsius and Voyager and FTX for some of them to start to get the idea that Bitcoin is the innovation, and they should come back to basic first principles. I think we need to educate a lot more people. What keeps me up at night is that there are so many mainstream influencers, so many policy makers, so many investors and money managers that still don't understand half an hour or an hour worth of Bitcoin fundamentals. But the world is still full of incredible numbers of people at every level, from the top ranks of our government to leaders, captains of industry, down to rank and file. The world's full of people that don't understand the theory of money. They don't understand what money is, right? They would say, oh, money is a medium of exchange. Okay, so therefore I guess the peso is just as good as the dollar, is just as good as Bitcoin, because they're all just mediums of exchange to somebody, right? And so the lack of awareness of the theory of money, that's it, something that keeps you up at night. The world is full of people that don't understand the power of an open, permissionless monetary network, right? The fact that you can move $1 million from here to Africa and you could do it in an open rail, and then you could do it 1 million times cheaper than the conventional 20th century banking system, and you could do it 1 million times better, and then you could program it 1 million times faster. So most people, they don't realize that money is technology. They don't really understand what true non-defective money is, because every monetary system in the history of the world has collapsed, and every money that's ever been invented before Bitcoin was objectively defective mathematically and physically. And so because people don't have that fundamental understanding of the physics of money, and they don't understand that money is technology, they're not looking for the solution. They have this massive blind spot. But they do have power, right? The world is full of people with money, with power, and with influence that are ignorant of these two basic principles. And the first principle explains to you why you would want to own Bitcoin. And the second principle explains to you why the future is 8 billion people with devices plugging in via the Lightning protocol to each other to trade and to run the economy of the 21st century. So we have to go and educate those leaders so that they embrace and adopt this physically perfected money and this ethical open network. I think that a lot of the pain that the Bitcoin community has absorbed is because of the slow response of the regulators. If the regulators had moved faster, if they had moved more aggressively in 2018 or 2019, you wouldn't have seen all of these, crypto casinos spin up the way they've spun up. One of two things will happen with regulators. They will either move much more aggressively in a fairly regressive, conservative approach, and that means they'll just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary. Because in a conservative world, Bitcoin is the apex crypto property and the apex crypto asset, and people will simply hold it as a long-term store of value. And if the regulator said everything in the crypto ecosystem is now, forbidden, all you can do is buy Bitcoin and hold it and sell it at the end of its useful life, treat it like gold, Bitcoin would still benefit, right? The other extreme would be the regulators act proactively, they act progressively, and they provide a path to registration of a digital commodity, a path to registration of a digital security, a path to registration of a digital token, a path to registration of a digital exchange, and a path to registration of a digital currency, right? And if they said you want to issue Tether, you have to file monthly statements, register with this, banking supervisor, and take on these responsibilities, to have these reserves, and abide by these guardrails. You can issue a stable coin. Mm-hmm. If they said, okay, well, you want to issue a digital security, you have to do it this way, fill out these forms, and every month or every week or every quarter, this is what you do. Then what you would see is a collapse of all the true scams. Mm-hmm. You would see the VC that have been trying to launch these other things, they would have to go through a registration process. Now you would actually understand, and you have the full disclosure and transparency. Many entrepreneurs would say, this is too hard. You get the sense that some of them never bothered to hire a lawyer or get a legal opinion, right? It's like, I have to pay for lawyers and accountants in order to be in the business. This is too hard. You'll see a rationalization. 99% of all the tokens will go away. You will see some stable coins. There's a bona fide need for a coin like a Circle or a Tether. The world wants it. Maybe not in the US, but outside the US, the world wants it. So I think you would see some of those. I think you would see some digital securities. I think you would see, you'd probably see actresses and musicians. They would say, hey, I'm going to issue my, Katy Perry token, right? But they would do it with a lawyer in the compliant, ethical way, because they don't want to risk their reputation. The industry will morph. It'll change, and at the end of the day, Bitcoin will benefit from that too. It's not clear to me which approach is better for Bitcoin. The truth is, the only thing that is clearly good for Bitcoin is if we were able to disentangle ourselves from the crypto casinos. Right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, these have been painful events, and Bitcoin is cross-collateralized, and they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, at the end of the day, if you simply said, you're not a commodity unless you're an asset without an issuer, it would knock out the top 50 coins other than Bitcoin, and every institutional investor would say, I get it, Bitcoin is special. Bitcoin is a commodity. Ethereum, Solana, Ripple, name every other coin that ever had an ICO, every coin that ever had a pre-mine, every coin that has a centralized foundation, a management team. Every other coin would be deemed as a security, and as a security, they would all have to make fair disclosures. When they made those disclosures, 95% of them would collapse. A few would be left, and people would say, well, this looks kind of like a tech stock. And then they go, well, maybe I like the tech stocks better.
Let me know in the comments, what do you think about this interview? Thank you for staying until the end. Please like and subscribe if you appreciate my work.